and welcome to Phil's Take YouTube channel. And remember, every day you can listen to my radio show. It's a national show from 3 to 4 Eastern Time, okay? Now, we're going to answer the question that everybody's asking. How could the stock market be going up after the market crashed right here? How could it be going up? Well, I'm going to answer that. Listen to the question they're asking. This is the dumbest question I ever heard. And these guys on all these financial shows, right, they're supposed to be the geniuses. They're getting $2-3 million a year to tell you what to do, right? And they don't know. Listen to this. This was on Stuff and Alpha show yesterday, Sunday.
Listen, let me begin with you because I think a lot of people have been puzzled seeing this tremendous rise off the bottoms in the stock market over the last 3 weeks, even as we've seen these absolutely record-breaking unemployment numbers. Can you explain this great disconnect to the American people?
Probably not fully. Everything that's been happening both in the economy, given that it was a government shutdown by fiat, effectively, in order to try to...
Blah, 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 blah. She faked her way through it. She didn't know what the hell she was talking about. Let me explain to you what made this market go up. So let's go back, okay? I mean, this is ridiculous. It's pretty simple what made the market go up. And I'm going to show you right now and answer that for everybody. First of all, we had the stock market crash, right? And when the market crashed, what happened? Okay, what happened next? Well, we started to have what we call a short covering rally. What is that? Well, that means that the stock's at $80 up here. We'll say the market's at $80, and down, and let's say down here is $20. Okay, I believe the stock market's going to crash, go from 80 down to 20. So I borrow your stock. You say, no, you think the market's going to go up, so you're going to hold on to it. So you laugh at me and say, it's not going to go down there, Phil. I say, well, then let me borrow your shares. So I can borrow the shares. And then when the market drops to 20, I made a bunch of money. But remember, you got to sell me those shares now. I have to buy the shares from you here at $20. So I went from 80 down to 20. You were wrong. I was right. Now I buy the shares at 20, and that's what pushes the market up. That's called short covering. I do it, everybody else does it, and everybody's pushing the market up, the big institutions. That's one of the reasons. The other reason the market's going up, and they're all, wow, isn't this amazing, is because we have the same stocks pushing the market up we always have. Those are called the FANG stocks. If you take the FANG stocks, you take Amazon, you take Facebook, Google, and Netflix, those four stocks make up 38% of the stock market rally. That's right. If you go and look at the stock market rally we had on this side before it crashed, and the market went up about, let's say, had a $19 trillion gain on the upside. Remember, of the 500 stocks in the S&P, these four stocks, the FANG stocks, plus add Apple and add Microsoft, they're 38%. 38%. Remember this, 6 stocks. You got the FANGs, and you got Microsoft and Apple. So that's 6 stocks of 500 make up 38%. Let's round it off. 40% of these gains. Can you imagine that? So it's been these FANG stocks that have been leading the market up. Remember, when the market crashed in 2018, and I predicted it was going to happen, remember we had the market going up in 2018. I told you it wasn't going to work because the FANG stocks were leading, and I said they don't have the banks leading. You have the financials to lead. And I was right. And I said that on January 16th, and I said everybody mark this day down. It says first day of the crash, and I said the worst day of the crash will be in December of this year, 2018. That's how far I projected it. And then what happened? I was absolutely correct. In 2018, because the FANG stocks were leading, not the banks, the market went down 20%. Okay, I was dead right on that one. And I said this whole market's going to crash based on what's going on in China and the FANG stocks. How'd they get the market to move back up? Well, what they did is, again, more QE, more 0%, more stock buybacks, and then they're going to sign the trade agreement every day. They're going to sign the trade agreement. So it went up all the way up to February right here. But there was a problem. February, the market turned around, and just like in 1929, woke up one morning and it crashed. And why? What's going on here? Because it has the wrong leadership. It had the wrong leadership on the way up. It had the FANG stocks, no financials, it crashed. Had the wrong leadership on the way up, and it crashed again. And the other reason why it crashed again is because we kept interest rates too low for too long, and our debt just exploded. Our debt has exploded big time. Not just our national debt that's around 24.5 trillion right now, but you take the world debt, okay, is around 262 trillion. All that debt, tremendous pressure. So the market dropped. Now all of a sudden they're all giddy, going, "Hey, the market's going back up again." How to go up? The same reason. The same reason here. The same reason here. You take the four FANG stocks and you take Apple and Microsoft. The same thing here. But they keep breaking down because it can't sustain itself. You can't have the FANG stocks leading. Without the financials leading, your debt is not sustainable. And that's what happened here. And now they're starting all over again, keeping interest rates at zero, just like they did here, just like they did here, just like they did here. So what moved this market up? One, we had the stock buybacks, okay? We had the short covering, okay? As I explained, if the stock was at 80, I thought it was going to go down to 20. I was right. So when it got down to 20, I bought those shares from you. That's called a stock buyback. That pushed the market up. That's one. Two, we had the FANG stocks pushing the market up. Three, we have zero rates, okay? And they're thinking that rates are going to go even negative. So nobody cares anymore about the economy. Nobody cares about the bad news. Nobody cares about earnings. Nobody cares about profits. As long as they keep interest rates at zero, the speculators are going to come in and buy stocks. But there's a big problem with this rally. Not only was it a short covering rally that made up probably about 80% of this, okay, the biggest problem was there's no volume. If you go and you take a look at the volume on the sell side, how many people were selling, the volume was like this. If you look at the volume on the upside, the volume looks like this. The problem is the volume is a problem. There's not enough energy in this market to sustain it. So we've been going sideways now. We got up to around 280 on the charts, okay, 2,800 or just say 280 SPY, and we've been stuck here for 4 weeks. Okay, we've been in a 5% range. Why? Because we got the wrong leaders. You got to have the financials. But the financials are in big, big trouble, okay? Because the banks have too much debt. So if you take a look at what happened in all these markets, what pushed these market up was the banks borrowing money. They borrowed over $9 trillion so they could buy their own shares back. That's what it was all about. They borrowed $9 trillion so they could play the game to keep buying their own shares. Why? Remember what I told you before. When they buy their own shares, if they have shares that are trading at $10 and they got 15 million shares and their earnings come out and their earnings are at 4%, okay, that's not enough to move the stock up. So what they do is they come in and they buy these shares here, drop them down to 13 million. Now, if you got 13 million shares, you got 4% earnings growth, then that's enough to move the stock up $5. And this is what they've been doing. And so the next quarter comes in, their earnings are at 3%. Same thing happens again. They have their stock is at now it went from 10 to say $15. Okay, but same thing at 3%. Okay, they got now 13 million shares. The problem is that it's not enough to push the stock up another $5. So what they do is keep borrowing money at zero rates, and now they got enough money to buy their own shares down to drop them from 15 million shares down to, let's say, 12 million shares. Now, with 5% or let's say 3% earnings growth, no problem. They can spread it over 12 million, the stock will go up. But with 3%, if they tried to spread it over 13 million, it wouldn't work. So they got to keep buying their stocks down. They got to keep reducing the amount of shares to keep pushing the price up. Otherwise, the stock would go down. It's all fake. So that's what's been pushing the market up each time, and there's no financials behind it holding it up. So that's where we are today. We're sitting right here now at a critical point at 280, but the big problem is debt. And that's where the problem is. They keep telling you, you keep hearing them say, oh, the economy's really doing terrific, okay? The economy's going to be right back. We're going to bring this company right back. We're going to snap back. No, it's not. Because remember, stock markets, first of all, if you go and look at 2008, okay, we had a 50% loss in 2008. If you were in the market, you had a 50% loss, you lost half of your money. That means to get back even, you got to have a 100% gain. That's pretty tough, isn't it? Yes. Okay. So in the 2008 crash, remember, you lost half your money, but you had to get 100%. You had to double it just to break even. That's the problem. But the problem also that we have right now is we have too much debt pushing down on the market, too much debt pushing down. We got so much debt and our budget deficits are so wide, our budget deficits, trade deficits, we got too much pressure, and that's what's holding this market down. And that's why you're seeing the volume so tiny, okay? So again, when they ask you, why is the market going up? It's simple. Remember what I told you. 75% of the move is from stock buybacks. Those people who made money on the way down, they had to buy their shares back. That pushed it up. And then the other reason was we have the four FANG stocks and Apple and Microsoft. And that we still have zero interest, which the speculators still want to speculate with that money. But the problem is it can't last because we don't have the banks. Okay, same thing here. We didn't have the banks that collapsed. We didn't have the banks leading, and it's going to collapse again. Until you get the banks leading, the market can't sustain itself. It just can't. The FANG stocks are not the leadership stocks. Yeah, they do temporary, but that's it. So what's going to happen now? Okay, the market is going to test this bottom before it tests the top up here. That's what's going to happen. It's going to test this bottom before it tests the top. And you can see that by watching the volume getting worse and worse. And let me just show you that. Okay, the volume's getting worse and worse. And you can see the volume over here. It keeps decelerating. So when the stock market's going up and the volume's decelerating, when it's doing this, the stock market's going up like this. And the volume is going down like this, the opposite way. That means, and you don't have banks pushing the market up. You got you got four FANG stocks and Apple and Microsoft. It can't hold itself. And that's why now for over 15 days, almost 4 weeks now, okay, look how the struggle that we've been having here. We've got a tremendous struggle here. We've been going from about this 280 right in this area right here. We've been in about a 5% range. Are you nuts? So are they going to get back up here? The probability is no. We're going to take these lows out before we take these highs out. Okay? All right. So I hope you enjoyed that. Remember, you can become a member free for 10 days. Go to philsgang.com, Working Investor Group, sign up, 10-day free membership. 10-day, you get my MV2 color-coded chart right here that tells you when to buy, when to sell by color. And it's always right. You sell when it's red, you buy when it's green. There's nothing like it. After 10 days, you're going to do what everybody else does. At the end of the day, I wish I found this long time ago, this chart to tell me when to buy, when to sell, when to run like hell. But most of all, remember, it's the last time you're going to lose 50% of your money every time there's a crash. Because the next time when it turns red, we're going to show you how to make money when the market goes down. It's called shorting. Okay, see you on the charts. Remember, go sign up right now for your free membership and free chart at philsgang.com. See you on the charts.